All right, good evening, guys. Ken at Tortoise Capital. Happy birthday to me. Great checkup with my cardiologist. All systems go, exceeding expectations. Next checkup. Blood work in 3 months, follow up in 6 months. I see the surgeon tomorrow and then start physical therapy on Thursday. So, all good. Gratitude and forgiveness. I owe you my 7-day Vision Quest protocol. I'll have that done tomorrow. So let's get started with the hybrid swing portfolio. This is featuring 30-minute charts with a standard set of symbols. And here we go. So starting with Alcoa, took the supported fall crossing and the PSAR flip and standard work, and it closed weekly. So we're holding about +2, looking for another move tomorrow. And the reason I'm holding that is because it broke basically the support level, and then this is a big gap. So there's no support in here whatsoever. So the next support level is all the way down here at 29.50. So if there's one more day of weakness, then that should move quickly, and then this becomes a superstar trade. I'll try to keep it in the money, though. AI, I initiated the, I'm treating this as a COTA 2 and failure to fail. And it had a chance to fail here. It did not. It broke through and finally just held my nose and bought it. We're holding a little fraction of a gain. And it's so close to the 5-day high that if that breaks open, then this is no resistance at all. And then the next move is up to 33. So that's a speculative one. Amazon, no trade. Caterpillar, I closed the speculative emerging dragon from Friday, and it just started doing nothing. So we took the minus 0.5. I didn't get the afternoon trade. I had enough exposure to the south that I didn't want to try to get short the best industrial company. So Cliff, we closed that little gain, which was nice because then it gapped down here today. We took that one short with a standard risk and closed it at the dragon for about +1. I really like that. That'll set up for a COTA 2 if this starts recovering tomorrow. But if this fails, I will treat that as a collapsing dragon at 15.10, and I'll play for a test of 15 and then a return to 14.70. CVS initiated the supported fall crossing on the PSAR flip, standard risk, half an hour in hand. Dish Network, no trade. Devon Energy, I tried the emerging dragon long after it held and did not fail. It gained, I had about 2R in hand and settled for 1. Disappointment. Electronic Arts, no trade. Emerging markets tried the drop and flop with a fractional gain. It did not fail like I was visualizing. I thought it was going to get down to test this region. It did not. So I just took the dragon exit for basically a scratch. ETHE initiated the SSC. I'm buying it at the same price level with the same risk that I did here. It wouldn't hurt my feelings to see that, and it did not fail, so I'm willing to give it another day of speculation here. Mexico initiated the continuation reentry short. That's holding 3R, and good chance for more tomorrow. Brazil, I missed the collapsing dragon, but I was really focused on Mexico, which was weaker. Intel, Tried the Emerging Dragon continuation. This was the last week's trade. Tried the Emerging Dragon continuation. It just did nothing, so I got out of it with a scratch. It closed poorly, so this is actually hinting at some downside movement tomorrow. IP, this one was a no-brainer. After that really nice long run up, and then a drop and flop, and this is holding +4, and it just erased all of this goodness. And now the next support level is all the way down here, so there's more on the downside coming. Watch that one tomorrow. Real estate, same thing. Collapsing Dragon holding +2. Regional banks, drop and flop, +1, and showing weakness. If this support level, this is a recurring theme. If this support level does not hold tomorrow, down we go to here, and that's going to be a nice move. Mattel, no trade. McDonald's, no trade. Merck, collapsing Dragon short, and I should have gotten a second position on it. I missed. Where I should have been was this. I should have been on that failure to hold. And now this is testing right here. If that collapses tomorrow, look out below. So that's plus almost 3. Microsoft, on the other hand, broke out from the chop. PSAR flip, gap and go, and holding 2R, and could be more tomorrow. Marijuana, continuing that little run-up of the last week. PSAR flip, standard entry, holding 4R, and more to the upside. NVIDIA, tried the SSC and scratched. Clean Energy, tried the short and scratched. Rivian, no trade. The S&P was in as tight a sideways range as you could ask for. So the moves today you could attribute to the underlying strength or weakness of the individual targets themselves. They were not inheriting anything from the market on its day back from the long weekend. Tesla, I initiated the COTA 2, and that worked pretty nice. Pretty happy with that. And oh, this is just interesting to me here. I thought maybe this was a residual. So I adjusted the PSAR flip the PSAR just a little bit. I made I'm trying the acceleration factor of 0.14 instead of 0.12. But I just noticed this, how clean that now lines up with the RL30. There's something profound in that idea that the RL30, because we treat that, look at that relationship now. We treat the RL30 as the health of the trend, and when that is also the stop, boy, is that ever interesting. Look at that just that little adjustment to 0.14. I have it at like 0.02, 0.14. And it was 0.12. Just that little adjustment to there is doing some interesting things between that and the southern skin. It's almost a parallel line now with the southern skin of the dragon, and I really like that. So I think I'm going to keep that for a while. Now this is a natural hesitation point here in Tesla. Why? Because it's at a resistance level. It's had a nice rebound. The MACD is reflecting that it's gotten through the Red River and now is at a turning point. Does it continue for the next leg of the summer, or does it fall back into the winter? So you got to have your stop somewhere around there to lock in 2R, but also to be ready for a breakout above, say, 260, in which case it's easy. So that's a perfect tactical frame for something that we like long-term, but which is vulnerable to short-term variation, right? Then U.S. Steel, no trade. Sniper trade of the day. So we're now looking at a 3-minute chart. This was Friday's close. Here was a gap up. It made a 3-minute low here. The 3-minute high was near the open. It closed here, got here, and then the next bar took off. So we're going to get it long from there. And standard risk box. I like that little bit of acceleration now in the PSAR flip. This is what I like is that it is closing this on nice run-ups like that, where it just takes off. It's sort of that little bit of extra acceleration is allowing it to catch up to price just that little bit faster, and I think that's why I'm going to keep it. Now, notice the importance of discounting the tails of the price bar as noise and treating the price as the RL10. So there is still that little buffer inside there. So that's a entry at about 3R on the emerging dragon. That's at about 5R for the third entry. And standard exit when when the RL10 rolls over, comes back to the edge of the dragon and basically a PSAR exit. So this turns out to be on the first position 1, 2, 3, 4, 5, 6, 7, 4, and 2. So that's about 13R potential on that move. And notice the strength of the PSAR as a guide. And notice also the VWAP, which gives you the volume weighted average price. So when you see that the move is north of that line, this is all excess gains and speculative energy. And when that cracks and there's no more buyers coming in, that orderly pullback to the PSAR gets you out here, and you get to lock in that much excess gain above what market participants would consider to be the fair value. So that's the essence of trading. Is Eugene asks, how does the acceleration affect the turn related to the RL10? I didn't really notice much of a change. I think that's about where it was going to happen anyway, in that third bar. So if you get that nice acceleration and you get 2 bars of retracement, that's about enough for that to roll over, especially when you have large bars. I think that's a good time to be, that's like a 1, 2, 3 exit anyhow. So this turns in time to take advantage of where the edge of the dragon is. So any exit in this region, you're pretty happy from your initial entry, and you're supporting second and third positions. So a good question. I think that's my answer. I tried the. Now this is a. This would be a Kata 2 if this could break through, but it did not. And so you get this peak of the RL10, belly of the RL10, a lower high. PSAR has flipped. So I'm treating that as a pocket entry like a kata 2 to the downside. If I had waited for it to breach below and then entered in here, it would have been a collapsing dragon, but I wanted to, it had almost 10 bars to make that move, and it did not. So I decided to give that one a try. And again, we got the standard risk on it. And we got plenty of markets money to speculate with. Comes all the way back to the VWAP. That's your reasonable move. Now, if it holds support here at the VWAP, like it did, then you have reasons to believe that there could be another leg north of the VWAP, which is what that move was. So this would be the pause that refreshes, comes back to the VWAP. By entering here with the standard risk, you have a 2-to-1 on a test of the VWAP. So there's your 2-to-1 justification for taking the trade. And then this holds, and then it crosses, does a PSAR flip. So we take the exit. And I take the entry as the RL10 now turns to spring. So I treat that as a supported spring crossing because you have lower lows in the turning point of the RL10. So it's not a kata 2. Although, to be fair, there was still a heck of a move. Whoops. There was a heck of a move that brought it up to this location. So if you saw it as a kata 2, you wouldn't be crazy. And then there's a nice retracement back to retest the peak of the RL10 and almost to the penny. And so when you're framing that, you say, well, I've got 4R potential on the reasonable move back to the previous high of the day. And if this fails, then you have a collapsing dragon entry short right there anyway. So we end up getting about 3 more. And that was enough for the day, I believe. Yeah. 17R potential on the sniper trade of the day. Worked with Luke tonight in the Creativity 202 check-in. He's using a lot of the insights from the RLFF, and in the creativity lesson, it was an exercise that had him consider the idea of the RLFF and then create a narrative that would align with the type of trading he's doing with the 5-minute Aussie. So this is Luke doing the work, talking about how to apply that lens of regression line fractal framework to his trading. Now he's using the Aussie $5 here. This is his pocket entry. He gets this second entry here because on the shorter time frame, that's actually a kata 2 second position. It's also a breakdown below the belly of the RL30, and he gets that one. And then this felt like enough, so he gets paid on a nice piece. He gets a 1, 2, 3 entry. The RL10 is turned. This is a second position based on looking at the 3-minute chart, a kata 2. And so he's actually able to get 2 positions in with this deeper understanding of that turning point. Instead of waiting for the full PSAR flip, he's able to get 2 positions in, and then exit with the dragon exit for a really nice move. I'm trying to hustle him up to get this turned into rule sets for you guys to study in a home study course, reasonably priced. It's the Aussie US dollar, so that trades 23.5 hours a day, 6.5 days a week. And it's pretty awesome. What he's doing on his management of this is that as he goes through his work, In this case, he's also using the same rule set on the DAX. He has certain trades where it just feels easy, and then other ones where he has to work a little harder. So those are the individual trades that govern his rule set. And then what he does is he aggregates the whole day. So this is the aggregate for Monday. He's using $500 of execution risk. His net for the day was 0.44. So that's a plus $220 for the day. 0.45 on Tuesday, 0.3 on Wednesday, 1R on Thursday, Friday, no trades. So 1.3, 1.7, that's a 2.1 week at $500. That's a $1,000 week using 5-minute charts. And when you get paid, you're done for the day in a matter of about 20 minutes. The 5-minute Aussie coming to a theater near you. In the Foundation's Q&A, Hamad asked for some feedback. And so what I did was post this in the Foundation's course and on Patreon to say, hey, what kind of advice would you give as an accountability partner? More importantly, what kind of lens would you use? What kind of coaching eye or accountability eye would you use to be able to assess his ideas? So let's take a look at this. As I'm preparing to go through his proposal for how to expand his trading, I'm going to make sure that I ask a set of standard questions. These are the mental models that I'm going to use to make sure that I'm being systematic in how I review what it is he does. So I'm going to make a note to myself about each one of these. I'm not going to tell you what my answers are because I want to give you a chance to put together your notes on how you think I'm going to answer those or how you would answer them, and then you can compare what I say tomorrow to what you came up with. And that's how you develop the coaching eye. That's how you become a good accountability partner. So what I'm going to do is, in approximately this sequence, is I'm going to look for evidence that he's using the plan, prepare, execute, and assess framework, which governs everything that we do. I'm going to take a look to see what is his motivation for making these proposed changes. Is he coming from a strong place or a weak place? Is it based on evidence and rationality or emotions? Is it a reaction against certain results? Or is it based on a systematic review of his posture? I'm going to take a look at how he's expressing reward and risk throughout this systematically. So I'm going to check to see how much money he's going to put into the proposals and compare that at the pilot level to his production level. And so I want to see how he's using reward and risk analysis to sort this, to make this proposal. Do I see evidence that he's taken that into account? Is he making his decisions based on evidence or feelings or dreams? How is he framing the decision? What is the mindset that he's using to brief me on this? Is this the result of a business analysis and a project manager's report on an opportunity, or is this a dreamer coming in to pitch some vision of the future based on hope and a prayer? So how is he framing the decision in terms of structure? What models or rules is he using? Does he have a clear research question in here? What is it that he's trying to prove? Like I noticed one statistics prove I'm consistently successful, increase position sizing. So it looks to me like he's already using phases and is asking intermediate research questions about what is it that he's trying to discover. Does he have assessment criteria so he can determine what the data that he gathers means. How is he going to measure success or failure? Has he expressed this effort as a SMART goal? Is it specific? Is it measurable? Is it actionable? Is it realistic? And does he have a time dimension on this? Has he done that? I'm going to look to see where this proposed system or strategy fits inside of his larger meta portfolio. What part of his trading strategy is this covering? Is it going to leverage something that's already doing well, or is he going to do this to expand his outreach and efforts? Is he going to cover a blind spot? Is it to offset some risks in a different system? How does he envision this tool as part of his toolkit? If it was a golf club, what part of the golf course is this designed to work on? Is he thinking about this in terms of paper trading, small position trading, limited risk, production level? Where does this fit in the whole prototype versus production system sensibility as a business effort? To what extent is he leveraging his known strengths in exploring this, or avoiding his weaknesses? So I'm going to look at strengths, weaknesses, opportunities, and threats. How does this fit into our understanding of where he is in his ecosystem? Has he incorporated systems thinking for the long run? Input, process, and output in a learning environment, in an operational environment? Is he, or is this relying on a lot of high adrenaline, conscious level actions that he's got to focus on, or is this part of a routine system that he can execute efficiently with low cognitive effort? Do I get a sense that he's hurrying, or that he's taking an appropriate amount of time for this experiment to unfold? What kind of expectations for this can I detect? Does he have a bias that's immediately obvious? Or is he really looking at it from direction neutral, really just as an experimental approach? So I might add to that the idea of bias. I think I want to put bias in there. So that's the lens that I'm going to use for evaluating the particulars of his proposal. So if I just do a quick, rapid read through, things that jump out at me. He feels like he's finalized his systems and rules for day trading stocks. So I'm going to say, show me the evidence of that. And he's also expanded that to currently test on Forex trading at certain hours during the day, because the patterns and rules and decisions that he has used are proving to be very fractal between those two different categories of targets. His research question is, how can I incorporate swing and potentially core trading into overall trading? So I can already see that he's taking into account, where does this fit inside his larger strategy? So I'm excited to see that. My major concern with swing trading, he says, a concern, not a fear or a risk, just a concern, an issue, a feature to deal with, is the overnight gap, which can either go for or against you. And so he's still thinking his way through how to manage that risk. So he has a tentative framework to incorporate swing trading as follows, and it's parallel to the framework that he's using for intraday trading on Forex, which actually sort of has a swing trade feel to it when you're using 30 minutes and frog boxes with an MMRB to start off with. Trading at low levels of risk of $50 per trade, I believe, is reasonable for his portfolio size. And limiting exposure to 4 positions, I would say that is a max because of span of control. Although with 30-minute charts, that should be certainly manageable given that he's got a span of control of 4 when he's using 3-minute charts. So I believe that 4 positions on the 30-minute ought to be easy. He may have to look at that, may exceed his overall span of control if he's also trying to do 3 minutes with 4 positions and now adding periodically 4 positions, up to 4 positions on 30 minutes. So I would just take a look at that. He's going to measure the statistics of performance on a weekly basis in the usual way. He's going to do chart analysis, update his learning journal specifically designed for swing trading. So I'm going to take a look at his standard note sheet and the statistics. He's got a decision to use evidence of statistics before he increases position sizing. Is there something missing from the framework above? And then if that sort of works, looking to expand it to core position. So this is going to take advantage of the fractal nature of the patterns that we're trading. He asks, am I jumping too far ahead? In other words, he's asking for sort of a independent assessment of exactly the kinds of things that I'm going to review. I'm going to ask him to answer his own question, to take a position for and against. So I'm going to ask him, like we do in the Fletcher treatment for kids, is to develop a persona like Goofus and Gallant, or the pro side and the con side of the argument, to set that up as 2 different lawyers, to make the strongest case for, yes, you're jumping too far ahead. What's the evidence in support of that? Or no, you're not jumping too far ahead. You have reasonable risk management. And that's going to cause him to take a fresh look at the reward versus risk analysis. For instance, if he were to focus on the intraday system and increase position sizing to production level first, and then look at swing trading, or can he trade at a lower risk on the intraday while he's exploring swing trading? So in other words, go at like limited rate production or prototype and do both of those to discover which. I think I know which way I want to answer that, but that's a very good question, because you don't want to simultaneously increase your day trading to production level and increase swing trading to prototype at the same time, because now you're trying to do 2 things at once, and that may exceed the span of control. It feels like swing trading should be easily incorporated into the trading framework, since he's already looking at 30-minute charts while trading the 5-minute charts. And that's an example of leveraging strength and SWOT analysis already. And so I'm going to prepare an answer for him, I think, on Thursday in the Foundations course for the Q&A, and that's where I'm going to provide my specific answers to what he's doing. But that gives you an idea of how I think about, with my coaching eye, on proposals for change. So he's come in with what I consider to be a pretty good business plan and a research proposal, and I'm using just sort of a standard set of lenses to review this. So that's what I would expect an accountability partner who's been trained in our approach with the Foundations course and the Creativity course for sure. The guys who've gone through the Creativity course have even more tools at their disposal, because we have about 30 different lessons, and you learn things like reframing from different points of view, stress testing, Imagineering, and there's at least 30 lenses in the Creativity course above and beyond the Foundations course. But this gives you a pretty good insight into what the Foundations course will teach you to do about your own trading and your strategic approach, and it allows you to become a pretty good accountability partner if you routinely look at your partner's work through that lens and then hold them accountable to doing the same answers. Then you can discuss the evidence or the analysis from each of those models as they're appropriate. So that's what I wanted to say tonight. We'll do a quick look at the traders. Let's see what we can come up with here quick. Let's see. Slight loss day for Brian in the Euro Aussie. There just wasn't much of a movement in there. He did get what was available in the Kiwi, and I want you to notice that he didn't chase, and he got what was available. On his third trade, which is the Euro Aussie again a little bit later, this was today. The other one was for the 4th. He said, "This felt like a great day in hindsight. Got what was there, wasn't concerned about the lack of trades." He's using the visualization of a border collie trying to chase the herd and only doing what is natural. The border collie did what she was supposed to do, and he just simply was able to wait for what she delivered to the pen. That's a really powerful vision of emotional state management using border collies, which he grew up with, and that's really helping him manage his emotions over the course of a long trading day. So +1 to Brian for that work. Jose continues to grind it out very nicely. Here's a nice PSAR flip, and he got what was available, about a half of an execution R. And he got a scratch where there was only a scratch available. He waited long enough for it to make its move. It did not, and so he gets out. Perfectly planned, perfectly executed, well done across the board. So that's everything we have for tonight. Hopefully you got some value out of that. I think there's some good lessons in there for you to consider going forward. Take good care, and we will see you tomorrow.